Hey everybody, Douglas Boneparth here, president of Bonafide Wealth and the co-author of The Millennial Money Fix. And you're joining me in my quarantine office basement to go over how to invest in extremely volatile markets. To help us with this, we're going to think about it like baseball. First base is staying the course. This means we're not interested in locking in our losses and trying to figure out how or when to get back into the market. And if you have time on your side, it generally means that you can weather these storms knowing that things will eventually recover. Second base is rebalancing our accounts. This means getting back to the target allocation that we had to begin with. So if you were an 80% stock and 20% bond investor, now might be a good time to get back to that original allocation. This will help you take advantage of buying stocks that are lower priced than they once were. Third base, for those that have a long-term time horizon, might want to take advantage of actually increasing their risk tolerance. Now, you're going to, of course, want to be careful here because taking more risk during uncertain times can be a pretty precarious proposition. But if you're comfortable and confident, and again, have time on your side, especially for young investors, now could be a good time to consider trading some of those bonds to stocks. So if you're 80% stocks and 20% bonds, you might consider going up to 100% stocks. Or if you were a 60-40 investor, maybe you would go as high as 80-20. Again, give careful consideration before you would increase your risk tolerance. Now, rounding third base into home plate is for those that have additional cash and want to invest into the market with that cash. The first thing I'm going to say is be extra careful here because cash is king, meaning liquidity has such a premium to it right now given the level of uncertainty out there. I would hate for anyone to favor an opportunity to invest in the market over their own security and ability to sleep well at night. Now, having said that, if you do have extra cash beyond a comfortable reserve and you feel comfortable or confident about your job and the income that's coming in, this could be an opportunity to take that cash and invest at low stock prices. The easiest way to do this is through dollar cost averaging. That's taking the sum of money that you would want to invest and dividing it evenly over a certain period of time. For example, if you had $12,000 to invest, maybe you would invest $2,000 a month over the next 6 months. Alternatively, you can pick an entry point to take that lump sum and invest it. So if the market has drawn down or gone down from its peak to the low point, at a certain percentage, that might be your opportunity to then go invest that excess cash. Sports may have been postponed, but that doesn't mean you can't round the bases when it comes to managing your investments, even during pandemics. I hope this was helpful when it comes to helping you manage your own money, and I hope that you're all staying safe while we spend time inside.